This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, January 19th, 2015. Euro dollar. So the euro remains under pressure overall, with the market recently breaking down to a plus 10-year low at 114.60 ahead of this latest minor bounce. Now, with daily studies well oversold, there is the risk for a bit of a bounce over the coming sessions, though the bounce is viewed as corrective in favor of a fresh lower top and bearish resumption. If we look at the move that we saw from the high all the way back at 125.70 about on the 16th of December down to the recent low, and we do a Fibonacci retracement of that move, the first sort of resistance comes in around the 1880 up to the 120 area between the 38.2 and 50% retracement of that level. So any rally should be very well capped into that area, with ultimately only a break back above the 50-day moving average, which comes in at 122.55 to compromise the bearish outlook. Sterling dollar. Cable remains locked within a consolidation just off its recent 18-month lows at 50.35, but the overall pressure remains focused on the downside, with the downtrend well intact. A break below 50.35 will open the door for a retest of the 2013 base, which comes in at 148.15, while only back above 54.85 would compromise the bearish outlook. Dollar yen. Dollar yen is locked within a consolidation after recently breaking to fresh 7-year highs in December at 121.85. Setbacks, however, have been very well supported ahead of 115.55, and only back below this level would compromise the immediate bullish outlook. Look for the formation of a fresh higher low ahead of the next upside extension above 121.85 and towards 125 further up. Euro Swiss. Euro Swiss has been consolidating in recent trade after the collapse that we saw last week from levels above 120 all the way down to as low as 85. The market now is locked within a consolidation between 97.10 and 106 above, and a break on either side will be required to determine the next key focus for this market. Aussie dollar. Aussie has been locked within a bearish price action over the past several months, and the market is in the process of correcting in search of the next lower top ahead of a bearish continuation. Look for a lower top to carve out somewhere ahead of 85.41. That's the previous 2014 low, while a break back below 80 will open the door for an acceleration to the downside towards the 75 handle. Dollar CAD. Dollar CAD has recently broken to fresh plus 5-year highs above 120, trading all the way up to 120.47 ahead of this latest minor reversal. There is risk for a bit of more of a pullback in dollar CAD, a corrective pullback, to allow for technical studies to unwind ahead of a bullish resumption, but any setback should be very well supported in the 116 area. Kiwi dollar. Kiwi remains locked within a consolidation over the past several weeks and months, although the broader trend continues to favor downside, with the market seen breaking below the recent 2014 low at 76.09, opening the door for deeper setbacks into the 72 area. S&P 500. The S&P 500 is locked within a broader uptrend, but the market has been showing signs of topping over the past several days. A record high is now in place just ahead of 2100, and if the market can break back below 1968, the low that we saw on the 16th of December, this would open the door for a bearish reversal and confirm the topping structure. Gold. Gold has recently broken above key medium-term resistance at 1256, and this now takes the pressure off of the 2014 multi-year low at 1131 and suggests that the market could be putting in a more significant base. Next key resistance for gold comes in at 1345, while only back below recent lows that we saw at 1217 would compromise the current bullish breakout. That's all for today.